Hey, it's Tom here and welcome back to the channel. So in the past few days we've had some pretty massive news come out of a couple of my favorite investors. The really big one being that Mohnish Pabrai has recently sold Alibaba. Now that is not the topic of this video. The next video on the channel that I'm going to do is actually sort of a 13F update of all my favorite super investors that I like to follow. So I will definitely cover Mohnish Pabrai selling Alibaba in that video, and there's videos floating around all over YouTube giving plenty of thoughts on that, as well as me actually mentioning it in the Punch Card Investing live stream and the Movember live stream that just happened a couple of days ago as well. So that is one that's just kind of been plastered everywhere. But some other news from the last couple of days that I really haven't seen anywhere here on YouTube just yet is actually out of Spier and a recent interview that he did with CNBC Pro. Now, if you want to watch the full interview, unfortunately it's behind a paywall, so I managed to get a free trial. That might be something you want to do, so I will leave the video link down in the description if you do want to do that. But Spier basically sat down and did a 40-minute or so interview with CNBC Pro, and he actually revealed two Chinese stocks that he's recently invested in. One of them we already knew about, which was Alibaba. We saw that show up in Spier's most recent two 13Fs actually. But there was also a second stock that he mentioned, which was actually Prosus. And up until seeing this interview, I don't think we'd seen any filings or anything to suggest that Spier might own Prosus. So in this video, I want to talk briefly about what Prosus actually is. If you don't know already, the very quick version is that it's a cheaper way potentially of investing in the Chinese tech giant that is Tencent, but I'll get into some more detail on that shortly. And I also want to cover the things that Spier actually said about Prosus and Tencent, as well as some of the things he said about investing in China more generally. So I do hope you enjoy the video. If you do, please hit like and hit subscribe on the channel if you haven't already. But without further ado, let's get straight into the video. Okay, so before we get into what Spier actually said specifically on China and Tencent and Prosus and so on, let me just give some very brief background on Prosus for those that maybe haven't come across it before. There are plenty of great YouTube videos doing an analysis of Prosus and also of Naspers, which is a second company that ties into this equation as well. But basically what you have to understand about the Prosus situation and the investment that Spier made is that in the early 2000s there was a South African newspaper company that invested roughly $30 million into Tencent, which of course today is the very large tech giant based in China, and they own an extremely popular and extremely widely used app in China called WeChat, and all the things that come along with WeChat and WeChat Pay and various gaming companies, and they also have a venture capital portfolio, and they've got lots of cool stuff going on there. And it's also a company that Mohnish Pabrai has actually mentioned in a couple of recent talks, really going into a lot of depth around the Tencent business model. Now, the interesting thing that has happened since Naspers made that $30 million investment into Tencent is that they've basically held almost all of that stake. They've sold off a little chunk of it, but if you look at Naspers today, which trades on the Johannesburg Stock Exchange, it has gone up a massive amount since the early 2000s, and north of, I think, about 80% of their value today is represented just purely by their investment in Tencent. And there's actually quite a big gap at the moment between the market cap of Naspers and the sort of net value of their investment in Tencent. So more recently, they've been trying to explore ways to try and basically close that gap and try and capture the full value of their investment in Tencent. And one of the ways they've tried to do that is to spin out this new vehicle called Prosus. They've done some kind of complicated things with share swaps and so on. But effectively, you now have Prosus, which trades on the Amsterdam Stock Exchange, which potentially has a lot more room to kind of grow into its full valuation of its Tencent stake, unlike Naspers, which actually makes up a very large proportion of the Johannesburg Stock Exchange. And there is still certainly a discount to net asset value with Prosus, but again, they're exploring kind of ways in which they can close this gap. I'll put the current Prosus net asset value up on the screen here, which they list on their website, and I'll also compare that to the stock price so that you can get kind of a feel for the current discount. So again, by Spier making this new investment into Prosus, he's effectively buying a lot of exposure to Tencent, about 80% more or less of the Prosus kind of net asset value is created just from Tencent, or is explained just by Tencent. And you've also got this potential kicker, which is kind of a valuation gap between the current value of that Tencent stake and the market cap of Prosus, which if that closes over time, obviously you get a return from that, as well as from the Tencent business. Okay, so now that brief explanation of Prosus is kind of out of the way, let's get into what Guy Spier actually said about Prosus and Tencent and investing in China more generally. Now, if you've been following Chinese stocks like Tencent or Alibaba, you'll know that they've been very, very beaten up lately. And part of that is kind of the relationship, I suppose, between the US and China. So here's what Guy Spier had to say on that topic. He said that a lot of his view comes from a book that he read by Henry Kissinger, which is called World Order. And that book basically explains that although there can be kind of tension between really large players in the global economy, such as the US and China, things do tend to try and find, I guess, a more orderly solution over time. So he says that it really shouldn't prevent us from going in and investing in places like China. He says that we need to kind of overcome our fears and take a long-term and more nuanced view. In other words, rather than painting China with a broad brush of just being uninvestable, we really have to focus on the individual companies that we're looking at actually investing in China. Interestingly, Guy Spier also said that you cannot not respect the leadership of China and what they're doing. Now, that might be a controversial statement for some people to hear, but this is kind of what Guy Spier went to go on to say as it related to that initial statement. He said that the leaders in China simply look at the world in a different way to what I might do here in New Zealand, or what a lot of people might look at it like in the US. He said that not only are there different ways of looking at the world, but he said it's extraordinarily unlikely that the leadership of China will act irrationally. He said, every time I look a little closer at the actions that may seem irrational, they really do seem rational and to kind of be moving China towards restoring order in the world. And maybe just to add an example to that, it was very big news maybe a couple of months ago at this point that many of these for-profit education stocks based out of China had recently more or less gone to zero. Most of them are down 90+% because they said that these for-profit education stocks or education companies are basically no longer allowed to be for-profit entities. And, obviously you're buying ownership in a business when you buy a stock. So if that business can no longer make money, that's not particularly good for the value of that business. So for that reason, the stock price went down a lot. And one of the reasons that was done is because there was a lot of kind of shady stuff going on with these for-profit education businesses. Whereas if you focus on businesses like Alibaba, for example, sure, it's a massive company and there's always going to be, negative things that are associated with something like Alibaba. But if you look at it at more of a holistic kind of high-level view, Alibaba with platforms like Taobao, for example, are helping individuals in poverty in China, start their own businesses and start to generate income by selling products on sites like Taobao and so on. So if you take a more nuanced view and just don't paint every Chinese company with the same brush, I think you can come to some quite interesting conclusions. And finally, on sort of China in general, Guy Spier said if China just wanted to steal investors' money, there are much simpler things that they could have done. So that's kind of a sentiment that has been thrown around by a lot of people. So that's kind of Guy Spier's view on, China just wanting to steal investors' money. He also said China wants stability and they want growth in a way that's productive for its citizens. He also said that although he, wouldn't recommend putting 100% of the portfolio into a stock like Alibaba or into China even in general, he said that you also shouldn't just be 1%. And when you've got conviction on particular companies and you think the upside and the downside kind of risk reward profile looks attractive, you shouldn't necessarily be at 100%, but you shouldn't be at 1%. You want to capture some of the upside. He felt that for him that was anywhere from a 3 to 5% bet in the portfolio. And if we look in Guy Spier's 13F, we do see that Alibaba is roughly a 5% bet. Granted, that doesn't capture his full portfolio because he's got international holdings and so on as well, but that about lines up with the position sizes that we're starting to see in his 13F filing. Now later in the interview, Guy Spier was asked more specifically about gaming. They brought up the company Penn National Gaming, which Guy Spier said maybe off camera, we didn't actually see it, but they said they mentioned to the interviewer offline that Guy Spier didn't have the greatest views of a company like Penn National Gaming. But then we could see that obviously Guy Spier has this investment effectively in Tencent through his Prosus stake, and they, have a gaming business. So how do we reconcile these things? And Guy Spier basically said that Tencent is not just a gaming company. He doesn't really like to invest in companies that are kind of bad for the world, and from a gaming company perspective, he doesn't like to invest in businesses where basically all that the company is trying to do is take money from from the people playing the game, where he doesn't think that they're getting a whole lot of benefit for that. I know there'll be varying opinions on that sort of thing, but he went on to say that Tencent is not just a gaming company. He said they have WeChat, which is basically a social media amongst many other things in China. He said that they are trying to do things around making life just more convenient for Chinese citizens in general, and he brought up an example of like a food company that Tencent have a venture in as well. And he said that also Tencent are one of the best venture capital companies investing in China that's going around as well. Again, he went on to say that investing in companies building the future is risk mitigation. Regulators won't necessarily try to normalize the profits of companies that are building the future. He also said that we find value increasingly not in the balance sheet and income statements, but in the quality of the business. And finally, on both Alibaba and Tencent, he said that these two businesses specifically are so large and so central in China that they're very, very difficult to displace. And he kind of compared that to his investment in MasterCard, where you have a lot of these kind of fintech competitors and buy now, pay later companies and so on starting to pop up. But MasterCard is kind of so central to a lot of people's everyday lives that they are really difficult to displace. And he said that if something does change with the business like MasterCard, it's probably likely to be displaced fairly slowly. And for that reason, he can probably see that things are starting to change and that maybe the business isn't quite as good as it once was. And he should, in theory at least, have the ability to, sell out without taking too much of a hit. He kind of compared that to one of the worst investments he's ever made, which is Horsehead Holdings, which is basically a commodity company that suddenly took on far too much debt and that kind of killed the investment overnight. He said that that's kind of unlikely to happen with a business like MasterCard, and it's increasingly unlikely to happen with businesses like Alibaba and Tencent. Again, Guy Spier said that Alibaba and Tencent are so large and so central that they'll be very difficult to displace, and will have lots of time to slowly sell if they do ever change. Now, a couple of final things I will mention from the interview, because it wasn't entirely, China and Alibaba and Tencent related. There were plenty of other topics covered as well. I'll just cover a few of my kind of brief highlights from some of the questions that Guy Spier got and that he answered. So when asked about when to sell stocks, Guy Spier actually said that it's typically not about valuation. He tries to basically do nothing most of the time. He actually said, in general, the best thing to do is nothing, and that when there's noise in the markets, he literally said people should take a chill pill. So that's kind of how he views, his portfolio kind of day to day, or even quarter to quarter or year to year. He doesn't try to make a bunch of little changes kind of in between. But he did say that when he does sell, it's not typically valuation related. It's typically when the management team starts to do something where you're no longer really willing to go along for the ride with what they might be doing. And he said that, typically when these things happen, unfortunately, share prices tend to come down at the same time if it's a management team acting in a way that's not beneficial for the shareholders. But he said it's kind of just the way things go and the way that he tends to think about selling. When asked about inflation, Guy Spier basically gave the classic Warren Buffett answer, which the best way to hedge inflation is just to own good businesses. If you're really not up for something like that, maybe something like real estate, he named more specifically, but he's not one to hedge with gold or anything like that, or cryptocurrencies. And actually, on the topic of cryptocurrencies, I was kind of surprised to hear that Guy Spier actually has a Coinbase account, and he's started to dabble in cryptocurrency. And by dabble, I really do mean that. He's not putting a bunch of his fund into cryptocurrencies or anything like that. He says he's put about $100 into cryptocurrency. So that's from a man that manages $300 million, I think. So he's put $100 into cryptocurrency. He said it's probably part revolutionary, part bubble. He says that, when we look back at this time in 20 years, it'll probably be very clear that this wasn't a complete bubble, and it's probably not pure rat poison like Charlie Munger has said about cryptocurrencies, but he said that there are certainly parts of the cryptocurrency space that are very likely to be just massive bubbles. He then went on to mention a couple of other businesses. So firstly, he mentioned IEX, or Indian Energy Exchange, which is a stock that's been a really successful investment actually for Guy Spier over the last few years. He said they're devoted to fair, low-cost, transparent power supply throughout India. Didn't really give too much away in terms of how he thinks about the investment today and at current prices versus how he thought about it maybe in the past, but that is something he did have to say on IEX. And he also commented actually on Salesforce. So Salesforce, if you don't know, was one of these very high-flying, at least from a valuation perspective, tech stocks. And he said that one of the mistakes he's made over time is kind of to dismiss businesses from a valuation perspective and just not pay enough attention to the really good businesses that people are willing to pay very high prices for. He said he's actually personally been using Salesforce for about 10 years now, but anytime that a price gets north of about 10 times sales, which is certainly the case for Salesforce, he kind of chokes a little bit and struggles to buy into those companies. But he said he's certainly trying to work really hard on studying those businesses and understanding them at the very least. So super interesting news out of this latest interview with Guy Spier to see that he is also buying into Prosus / Tencent / Naspers, that whole kind of complex, but he's doing it kind of directly through the Prosus vehicle. We've heard a lot of value investors talk about Naspers and Prosus recently, and Tencent. We've seen Mohnish Pabrai be very, very bullish in some of his recent interviews about Tencent, but it's a very difficult one to actually see if people are invested in, because Prosus and Naspers just don't show up in a traditional kind of US 13F filing. And by the same token, if Guy Spier ever does sell out of Prosus, it's going to be near impossible to see unless he mentions it again in another interview. But I think this is a really fascinating one to follow, and certainly one I'm going to be digging a little deeper on. So I do hope you enjoyed the video. If you did, please hit like and also subscribe to the channel if you haven't already. Also, let me know down in the comments below what you think of this most recent move from Guy Spier. But that's it from me for this one, and I'll see you in the next video. Cheers.